Alphabet recorded earnings last week, and there are risks or concerns by investors that a weakening China could impact future results. And so that's what I'm going to go through in this video and talk about what my position is on the growth of each one of their revenue segments as we look into the next 10 years. So that's what I'm going to cover in this video. So guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. So you can see that Apple's shares have not been immune from the overall market decline that we've experienced year to date. So they're actually down close to 24%, and you can see that the shares actually declined on the release of the earnings this week, but also they've been further impacted by the continued rate increases that the Federal Reserve has committed to. And notice that despite iPhone sales actually growing for the quarter, they actually fell short of investor expectations. Now, they didn't actually fall short of our expectations because on this channel, at least, we were sort of forecasting a bit more pessimistically with the valuation for Apple, and so it wasn't really much of a surprise here, but it's interesting that it did surprise much of the market overall. And you can see that Apple overall has not really been hurt as much as investors were originally worried about, but I would pause at this statement because a greater consumer slowdown could in fact hurt Apple in the future. So just because they haven't been hurt just yet doesn't necessarily mean that the pain isn't on the horizon. And what I mean about pain being on the horizon is not necessarily revenue or growth prospects for any one of their segments going backwards, but what I mean is, are they going to be growing at the same rates into the future? And is the valuation that Apple is currently trading at pricing in too much growth? And so that's what I'm going to dissect with you guys. Now, Apple did say on a call with their investors that year-over-year sales growth in December will be lower than the growth that they experienced in the previous quarter, which actually their September quarter was their year end. So effectively what they're saying is their first quarter for fiscal year 2023 is going to be a slowdown relative to like sequential growth year over year for the quarters. And Tim Cook did go on to confuse us a little bit by saying that the company, in July at least, had yet to see evidence in its internal data that the macroeconomic headwinds were having an impact on iPhone sales. It looks like they're backtracking on that a little bit, guys. Check me in the comments for you guys who know a little bit more about this story than I do. Now, here's the situation that I was talking about at the beginning of this video. Sales from Greater China in the September quarter, which was once again their year-end quarter, were $15.5 billion, which was up 6% from the previous year. However, there are concerns about the strength of Apple's business in China as the country continues to undergo more COVID-related lockdown measures. And so remember, as President Xi has now taken over his third term, he's not moving away, or at least has signaled that they're not moving away from COVID lockdown. They are also not embracing mRNA vaccines right now. They're using locally developed vaccines in China, which have appeared to be less effective. And so you got some scares here, I think, and I'll release another video on this talking about sort of when I think the COVID-related lockdowns will end. But I really think that you're going to go through the winter and into the spring. So at least 2 quarters of continued COVID policies. Now, that doesn't mean the whole country gets locked down, but I do believe that it'll be sort of a headwind towards consumer consumption. And then add to that the fact that we're going into a winter where all central banks globally are raising rates, which are going to continue to pinch the consumer. And so I think there are headwinds on the horizon for the Chinese consumer and, you know, the Western world consumer as well, which Apple could feel the effects of. Now, I know some of you guys are newer to investing. Some of you guys just started in 2020, which makes me feel really old because I started in 2000, which is kind of crazy. I guess 99. But if you download the 10K, you will find in note number 2 the breakout of revenue by product category. So the reason why I mentioned some of you guys are new, you guys may not realize that they do break out revenue even further than the way that they break it out in their press release. So always take a look at the notes to the financial statements. You might see some additional information there. And so this is actually what I use to forecast revenue as I take a position on growing each product category and not just revenue as a whole. I think it's a dangerous shortcut that's being taken by many finance YouTubers. And so I try to show you guys sort of like how the sell side and even the buy side will model revenues out. And then I give you the model. I mean, it's a very condensed version, but it really follows the same sort of structure as the way like a professional research analyst model would look like. And so here are the results going back to 2014. you can see that in 2022, Mac sales were actually very impressive. They grew at 14.2%. I wasn't expecting Mac to grow that fast. The concern, however, for many people is a slowdown in the services segment. Notice that it grew 14.2% as well, but it's down from almost 50% the prior year, and it's got a CAGR of 32.2%. I'm not saying that this is a bad thing that services is slowing down, but does it indicate slowing overall revenues because service growth seems to be the main thesis behind the higher growth valuation for the company? And in my opinion, I actually do believe that it's prudent to forecast services slowing down. In fact, I think it's prudent to forecast all of the segments slowing down, and so you'll see what I mean. And this is my forecast for their revenues moving forward into 2032. But guys, note, before I sort of talk about this, remember that this is not sort of advice for you guys. You guys really got to look at this from sort of like a learning perspective, but never make any investment decisions until you talk to your advisors. But note that the iPhone grew at a CAGR of 9.2% between 2014 and 2022. They grew at 7% in 2022. I'm forecasting 5% growth until around 2028, and then I bring that down to 3.8%. I'm doing the same thing for Mac. I'm growing it at 5% until 2028, then I'm bringing it down to 3.8%. With the iPad, I'm just growing that out at a flat 0% growth because I don't see iPad growing right now. Now, that might be a bit pessimistic, but that's kind of what I'm forecasting right now. With the wearables and home accessories, once again, 5%, and then it tapers down to 3.8%. And then with services, I'm growing that at 7.5%, and I'm growing that at 7.5% all throughout. So, I mean, I might be a bit pessimistic on this valuation, but this is sort of how I'm looking at it. I don't want to be caught flat-footed here. I think there's a very real possibility that this could also be an optimistic valuation in the face of a looming consumer slowdown with further interest rate hikes. And so what exactly does this mean for the valuation? Well, before I jump into the valuation, I just want you guys to know that you can download all of the models and get access to everything that the Patreons get access to at the lower tier of the Patreons. And notice that this is sort of where my valuation is falling. Using a terminal multiple of 15 times earnings, I'm valuing the company at approximately $108 per share. So the current share price is $140, which means that the share price as a percentage of its valuation is 129%. So a little bit pricey. I maintain that Apple is pricey in this environment. I would need to see a significant pullback in the share price to get excited about this one. But the other thing that I do got to point out to you guys is that approximately 80% of the people that watch this channel are not subscribed. So please, if you have the opportunity, hit that subscribe button and ring that notification bell. Now, the other thing that I recently talked about is I previewed AMD's earnings. I am going to put out a video talking about AMD's earnings and dissecting them completely. But in order to get access to that preview where I discuss where AMD, that semiconductor designer, is getting to, you can get access to that video right here.